All right, I think we are going live. For anyone who catches this, we are doing our weekly Wednesday live at noon, and we're talking about being a mortgage broker. Every week, every Wednesday at noon, we're going to go over some different topics on questions that a lot of people have about becoming a mortgage broker or opening a mortgage brokerage. Today, I wanted to go over what are the pros and cons of being a mortgage broker. In case you don't know who I am, my name is Megan Marsh, and I am one of the co founders of Collab Lending. We are a mortgage broker who does mortgages, closes loans in about 8 or 9 states here in the US. And my business partner and I, about 2 weeks ago, we announced on Facebook Live that we were so excited that after years, 18 years of helping home buyers get into homes, helping all the real estate agents that we've worked with, that we now wanted to help loan officers and any real estate agents who wanted to understand what becoming a mortgage broker, opening up a mortgage brokerage, like what does that look like? So we're just doing some mini topics here on Wednesday for 10, 15 minutes on live to give you information. And then we're going to have a free webinar on September. We're going to have a handful of them. So at the end of this, I will give you the site, the link you can go to. We will post it in the comments if you want to join us on one of those webinars to really get a feel behind the scenes. I'm here actually in a real estate office today, and we're going to be talking to some people about opening a brokerage. So it's perfect. And I didn't want to have a reason not to do a live because I'm on the road again. So I wanted to check in with anyone who watches this and is interested. So one thing I wanted to say before we got into the pros and cons that I just jotted down for today is that I'm not here to tell you that one way is better than another. I know that there's a lot of things out there on social media. There's people that post, there's groups, brokers are better, retail's better. I think it's great that we all have alliances and loyalties to where we work or what we do. That should be how it is. I think the biggest thing and why we wanted to do this and why we created the course for anyone who wants to become a mortgage broker is because it's really hard to find out like the truth, like real information. People will send you things about, hey, you can do this here and not here, but they haven't really lived both sides. And my business partner and I have done both sides. We've been on the retail side and we are brokers. Yes, we've been brokers longer. So, I'll disclose that. I prefer being a broker. That's my choice. But I have friends who work on the retail side and we get along great. So, we both kind of go back and forth with what we like about both. So I just want to share with you, we want to share with you at Collab Lending and through our course, which is Mortgage Broker Fast Track, the information you're going to hear. So today, let's just dig into some pros and cons of, being a mortgage broker, what they are. So the first one I came up with is one of the obvious ones, rate. As a mortgage broker, traditionally your rates are going to be lower. And I know that some people in retail will be like, is your rate really this? And it is lower. Now, there are times throughout the last number of years that retail and broker, the rates can be similar, and it's based on what the markets are doing. Right now, with the rate compression, the rates are quite a bit lower after sitting down and pricing out loans with a number of people on the retail side. Brokers' rates are a good half a percentage lower, even more, and the fees are lower because it seems like some of the retail mortgage companies are having to charge points all the time, and as a broker, we haven't gotten to that place where we have to do that. So yes, the rates are lower, which I think creates an easier environment as a loan officer to be able to get a deal. You don't have to fight for why somebody should work with you because your rate's higher, but maybe your service is better, or whatever the reason is that you're saying, your customers should use you wherever you are. So it does make your life a little bit easier in this environment when brokers' rates are lower. Right now it's bigger than I normally see. I I would say normally broker rates are maybe a quarter to 3/8 lower. The fees are also can be lower. But the con to that with rates is that brokers are capped, whereas retail lenders and banks are not capped at what they can make. Meaning, all right, if you're a loan officer, and let's say, because you're the ones who will understand this language, if you make 100 basis points on loans that you close, well, your company obviously makes more than that. So as a mortgage broker, mortgage brokers can only make up to 275 basis points. So that's one of the reasons the rates are lower. Whereas retail and banks, they can go and they can make 350 basis points, 400, 500 basis points. And so that's why their rates are higher. So I'm sure at times that's where maybe retail loan officers could be paid more, or there's room to do the, if you have a branch model. There are now some branch models in the broker space, but, the con as a broker is back in 2008 or 9, they capped what we could make as brokers, and that was 275 basis points. So there's a lot of strategy around how to, be profitable as a broker and just maximize the compensation you can make. The next one, probably one of the ones that I noticed the most for a pro as a broker, is the removal of red tape. When I went into retail, I couldn't do it. The red tape drove me crazy. Wanting to try something or do something, and you have to ask permission, which isn't the end of the world. But the problem is there's like 3 or 4 or 5 more people that had to be asked permission, and it took 2 to 3 weeks to get an answer. Whereas in the broker space, most mortgage brokerages are smaller. They're small business owners in their communities. So you're really asking one person, or it's yourself. If you open your own company, you're the one who makes the decision. You're removing all the red tape. You want to try something, you try it. You want to start a podcast, you start a podcast. Nobody has to review what you're doing. The con to that is that you need to be really diligent as a licensed loan originator to make sure that you're being compliant with the things that you're doing and trying. So, you're really putting all the risk on yourself for things that you're putting out there to make sure you're doing it correctly. Number 3 is products. So that was another big thing that I noticed when I went into the retail space versus broker. As a broker, I think one of the positive things is you can sign up for whatever loan product you want to offer to customers. You want to have VA renovations, you want to try USDA renovations, you want to do non-QM loans, you want to do, not just bank statement loans, but asset depletion loans. You can decide to learn that product and you can offer it to customers. For me, I like that because it helped my real estate partners grow, because I could approve more of their buyers. I could give them more at bats. The con to that is, as a broker, picking up more products is a lot of work. And you're taking a risk trying a new product because you're going to have a learning curve. You're going to make mistakes. And so you really need to have solid relationships or have really good communication if you're going to try. And you want to be careful that you're not spreading yourself too thin, trying too many banks, too many products, because the options are really endless. So the products, I felt, were a way to close more loans. Really, as a broker, if you get 100 pre-approvals, you should be able to close 45% of them. Whereas I think I heard that in retail or on the banking side, it's more like 25% is the conversion rate to close. And I think a lot of that is because there's not the depth of products. If you like keeping things simple and easy, that's where maybe retail is for you if you don't want to learn new products and do that stuff. And that's okay. So those are the top 3. I did 2 more for you here today. So number 4 is if you decide you want to open your own brokerage, so become a mortgage broker as an owner, there are some significant tax benefits to owning a mortgage company versus being W-2. And in the retail space and in the deposit bank space, you're always going to be W-2. You used to be able to write off, I think it was like unreimbursed business expenses, but once they got rid of that, it really did take away some of the benefits to where, having some type of ownership or being self-employed in some way, there is a benefit to that. I'll give you an example. So, my brokerage, the one of the business owners and I, we buy ourselves our car that we do a lot of traveling, for. So my car's bought through the business, and if you buy the right type of vehicle, so mine was one of those that you could buy and you can write it off all in 1 year, and then still write off other things in the other years. So if you buy a car for about $50,000, even if you finance it, that saved me, the business that year. You know, it was about 13 to 15,000 in taxes because we could write that car off all in 1 year. You can't do that if you're W-2'd or if you don't own any type of business that you can fit that underneath. So that was another pro. If you don't ever want to have to set taxes aside, that makes you nervous. That would be a con to being self-employed as a broker owner. And just for anybody who's listening, you can be a mortgage broker as a loan officer. You don't have to own a brokerage if you don't think you're ready for that responsibility or you're not interested in it. That's okay. So I wanted to make sure I clarified that. And then the last pro that I put down is a big hot button here. So control. There's a lot of rumors, myths out there that mortgage brokers lose control of the loan process. I will never forget when I went to this event with people in the mortgage industry, from owners of retail companies to loan officers. And this one guy who runs a retail company, said something like, "Oh, the broker side's like the wild, wild west." I'm like, "What are you talking about?" He's like, "You don't have the technology, you don't have this." I'm like, "Do you know how much it's changed in the last like 3 to 5 years?" And I'm like, I even scheduled a Zoom to show this person how amazing the technology has become because brokers have started banding together, and there's all these resources for us now that was never here 5 years ago. And they didn't want to hear it. I think that's part of being able to recruit on both sides. Let me tell you how the type of control that I think is a positive thing as a broker. So we kind of talked a little bit about it. You have the control to expand and get more revenue in by adding products like we talked about. You can expand into other states. I know that was a little bit of an issue because your office and your company has to be licensed if you want to get licensed in another state, which can be harder if you're working somewhere and the manager that you're working under isn't licensed in those states because it is expensive. Once you become a broker, there are ways then you can start getting licensed in those other states, especially if you own the company, or as an owner, you can let the people who work for you, if they have the right amount of business and it makes sense, you can get licensed in other states. It's not difficult. I would say it's more expensive if you don't close the right amount of loans. The other thing that you have control over is where what your money gets spent on. So if you're a broker and you're collecting that 275 basis points and you're used to making 100 of it, well, okay, what does that other 175 basis points go towards? And when you work in retail and at banks, you really don't have control over that. You may if you have a branch, okay? So, but I think there still is some of those layers of approval, whereas a broker and as a broker owner, you control who you hire, how you hire. I remember virtual assistants. We have virtual assistants we hire. I couldn't do that in retail. It just was it was out of the box. You control how you spend your money, marketing, compliance. You can hire people to do things. You can hire third parties. You can hire employees. The choice is yours. The choice is yours with how you set up your loan process. The choice is yours with who you lock your loans with, what banks you place your loans at. And the process really was no different between broker to retail. There are lock desks. There are people at all of the wholesale lenders who disclose your loans for you. There are processors. There are CDs go out before cleared to close to meet the closing dates. You can talk to the underwriters because every time your loan gets approved, you get, an approval sheet with the underwriter's name, phone number. They have a junior underwriter you can reach out to. You have an account rep who's trying to earn your business. So if you're not happy with how someone is doing a loan or how a company is doing, you can say, hey, like, this isn't working. I'm going to take my business elsewhere. I mean, to me, that's ultimate control. Is I don't like this product. I don't like how loans are, being done here. I'm going to go elsewhere. And so to me, that type of control meant everything to me. The con of the control piece is that it does come with a lot of responsibility. It's on you. You need to pick where the bank goes. So if it doesn't go well, then it's your decision, and you need to explain that to the borrower, your real estate agents. There really is no, there's not a lot of room to place blame anywhere else. If you decide that you want to spend your money on something and it doesn't work or it gets flushed down the drain, that's on you. So those things that can be hard for some people. And so kind of having a system and a method to follow under a more under structure with retail, that might be better for you. I know for me, broker's just been more natural. I've closed more loans, and it's just been where I feel the most passionate about helping people. So, I guess just kind of closing out here, because I wanted to keep these live short for anyone. I guess I just like to say, if you are a loan officer and you've always wondered, I guess just start imagining, what would it feel like if you could sign up for a new loan product? Like, does that get you excited? Does that kind of freak you out? That you can work with whatever lender that you choose, or you can hire in your local market. You can donate money to a local charity. You can have what you want. You can have what you want. And if you like this, keep doing these on Wednesdays. Next week, I'm going to dig deeper control. We're going to do how control more, how go out and how loans get funded, and how you can pick a bank, and how there's control when you want to pick the with. So next week's live, we're going to do that. And then if you would like to join our webinar to really get the details on what it's like to be a broker behind the scenes, I'll post in the comments here the link, which is thecolablife.com/sneak peek, and you can put your name and email in there, and then you'll get notifications. We're going to be doing our first webinar on September 14th. It's a Wednesday. And then that Saturday, which is September 17th, we'll be hosting that. And it's a free webinar. And it will really dig into all these things more next week. But once again, just so that you have that website, thecolablife.com/ where you can behind the scenes and learn more about the Mortgage Broker Fast Track course for any loan officers, real estate professionals who are interested in understanding the steps, the processing of becoming a broker at a brokerage. They knew about do as a mortgage as